On behalf of Bangalore Chamber of Industry and Commerce, we welcome you all for this two-day virtual conference on GST set on the theme Till Date and Way Forward. We express our sincere thanks for the august presence of Mr. Vasishta Chaudhary, Senior Vice President, Goods and Service Tax Network. Welcome you, sir. We also express our sincere thanks to our guest speakers today, Mr. V. Lakshmi Kumaran, Founder and Managing Partner, Lakshmi Kumaran and Sridharan Attorneys, Mr. Shivdas, who is also the Mentor Indirect Tax Expert Committee and Senior Advocate Shivdas and Shivdas Law Chambers, Mr. Shiv Kumar, Senior Vice President, India Business Finance, Tata Consumer Products Limited. We acknowledge the presence of Dr. L. Ravindran, who is the Senior Vice President of Bangalore Chamber of Industry and Commerce and also the MD and CEO of WealthMax Group of Companies. We thank all the participants for making it convenient to participate and support us for this initiative. I would request now Dr. Ravindran to deliver his welcome address. Over to you, sir.
Thank you, Madam Rupa. Thank you. Big thanks to the Secretariat and also to the Chair and the Co-Chair of the GST and the Indirect Taxes Committee. They have been doing a splendid job and they have really made the benchmark set very high for all the other committees. The next 2 days is going to be very inspirational in my view with the kind of speakers that we have, Mr. V. Lakshmi Kumaran, as to what is the GST system expected in the 3 years from now, Mr. Shivdas, Mr. Shiv Kumar, then Mr. Venkatraman, Additional Solicitor General of India, Chaudhary Sahab, yourself tomorrow on technological developments, Mr. Badrinath, the chairman of our committee, and then a panel discussion that follows on issues that industry has been hassled with and the way forward. Welcome each of the audience members who have joined us on a Friday evening. I'm a very poor person who understands very poorly of the GST and other system, although a company's finance team takes care of it. But I have, with my little common sense, tried to understand what happens world over and where India is positioned to be. GST, in my view, while conceptualized on the midnight of July 1st, 2017, if I remember the date correct, has been hailed as a landmark reform in India's tax history. It was expected to improve the tax GDP ratio, end the tax cascading, enhance efficiency, ensure competitiveness, growth, and ensure lower prices. It was also projected as a watershed in India's history as far as fiscal federalism goes. While the states have forgone a substantial part of their own tax revenue, they were in turn guaranteed a GST compensation, assuring 14% growth in the GST revenue during the initial 5 years. So many exemptions have come along with different tax rates, as against a single rate in many countries have been accommodated to protect the interests of different stakeholders. So built on a very strong foundation, India's GST paradigm stands on two key pillars in my way of looking at things. Number one, it is about revenue neutrality, and number two, about GST compensation for the states. Since I'm also a person with past with high difficulty, PhD in finance, so I decided to look at how certain other parts of the world have fared. The South African experience illustrates how zero rating and large exemptions have defeated revenue goals. In Mexico, although the country relied more on income tax with a standard rate of 16%, they could raise over 4% of GDP from GST, whereas India is still somewhere else. So reviewing 30 years of the Canadian experience with GST, it is shown that GST could be improved by limiting zero rating, tax exemptions, and harmonizing tax rates. The Brazilian experience indicates that transfers through social security subsidies tend to be more progressive than subventions or exemptions because reduced rates or zero rating do not usually get passed on to target groups or industries as happening in India. The resilience of the economy at the time of rolling out of the GST is critical in India for its wider reception, while the Australian experience shows differently. However, India was in the reverse gear given the downturn following demonetization and GST was introduced. As far as the compensation is concerned, while compensation legitimately has to coexist with GST, even the constitutionally guaranteed compensation for 5 years possibly has not been implemented in letter and spirit, forcing the states to seek their entitlement. So this needs to be certainly looked at by the government, I'm sure. The GST should be seen purely from a revenue point of view and as a fiscal policy tool for efficiency, competitiveness and growth. Despite many years and of efforts in evolving an Indianized GST system and over 50 months of adjustments with over 1,000 notifications with accompanying uncertainties in the first year and the novel coronavirus pandemic and the lockdown still in the saddle. So GST continues to be a continuing agenda, but how far and how long? This is a question that I would pose individually from my own personal end. With these words, I welcome each one of you and let's get started to a great session for the next 2 days. Thank you very much.
Thank you very much, sir. As indicated, the two-day conference is organized under the aegis of Indirect Taxes Expert Committee of the Chamber. The committee is led by Mr. Badrinath, who is the partner of Singvi Dev and Unni, co-chaired by Mr. Arun Ramachandran, Head Taxation, Tata Global Beverages, and mentored by Mr. Shivdas, Senior Advocate, Shivdas and Shivdas Law Chambers, and Mr. P.V. Srinivasan, Advisor to Wipro Limited. We request all the participants to kindly post your queries in the chat box. As we have disabled the audio and video for all the participants at present till the completion of the address by the speakers. We will enable the same during the Q&A sessions. Over to you, Mr. Badrinath. Thank you.
Sorry. Thank you. Thanks, Rupa. Thanks for that. And sir, very nice few words to start with from Mr. Ravindran. So I will take it from there. Yes, GST has been a landmark legislation. It wouldn't be wrong for me to say that the whole of the world was looking at India on the midnight of 1st of July 2017, which is what Mr. Ravindran also mentioned. So the idea of this half-day webinar is primarily, to see today we are in the 5th year of GST already, right? We have completed 4 years and stepped into the 5th year now. We are more or less halfway through that as well. So where are we while we have traveled the 4 years of GST? A lot of learnings, I would put it this way. We have had a lot of learnings, a lot of realizations, I would say. The businesses have already spent 4 years with the GST. We as businesses have had several blueprints during the April, May, June, July, August, maybe till December of 2017. So it was a discussion internally that came up to say that yes, now that we are already crossed 4 years of GST, we should take stock where we are. So that is one of the ideas, to see have the businesses really realized what they thought they have to because of GST. What was given as part of the legislative process, as part of the tax regime to the businesses. Where are we today on that is one question. Legal aspects, yes, I think legal aspects is something which is a permanent thing in all our lives. The different interpretations, different views, is here to stay. The legal issues are here to stay. Let me put it that way. So one thing that we have to really look at is, has it simplified over the years, in the sense when compared to the previous tax regime, where do we stand as far as the legal aspects is concerned? One more school of thought. I keep hearing this a lot of times. I will call it a school of thought. I've heard a lot of people say that we are still facing teething troubles of GST, though we are in the 5th year. I'll leave it as it is. As I told you, it's a school of thought. There are benefits, there are challenges. Of course, there are challenges with anything as big as GST that could have happened. Anti-profiteering is one other concept in this GST law. It initially came up with a life of 2 years, but yes, it has got extended now. Advanced rulings, appellate tribunal, absence of that has its own shares of do's and don'ts, pluses and minuses, as far as the businesses are concerned. They have their own share in every discussion that we can talk of. Tran credit, which we thought was very simple, straightforward when it was introduced in 2017. We thought the topic should end maybe in December 2017, but unfortunately it is there even today. The legal aspects, the operational aspects, call it whatever it is. I'll probably put it this way: as far as the legislation is concerned, GST, I think it's a fantastic piece of legislation. We need to maybe give it some more time to be able to see the fruits of its implementation. At the same time, I think government has already started seeing the benefits. I see when I look at the collections of the government across India every month, I think government is there. Government is already reached where it thought it should reach as far as the collections is concerned. With all this, I mean, this was in some substance a thought process that we went through to do this half-day webinar today and another half-day tomorrow. So as Rupa was mentioning, we have 3 sessions today. The first one is going to be by Mr. V. Lakshmi Kumaran. He's going to share with us his thoughts and views on how do we see GST system in 3 years from now. We are looking forward in this aspect. And Mr. Shivdas will give us a peek into the last 3 years, 4 years, and we are where we are now in terms of understanding what are those legal issues for which time and again there are umpteen number of cases before the High Court, even before the Supreme Court. What are the kinds of issues that have been raised and settled, raised and pending, and which are likely to come up given the legislation, the development, the approaches that are concerned. The third one is more from a business perspective, where Mr. Shivkumar will share his thoughts and views on us on the first aspects that I mentioned when I discussion today. It's more. I mean, we had our own blueprint in 2017 from a GST perspective of how it is going to impact my business. He's going to share with us a report card, possibly his thoughts and comments on where do we stand. Have businesses really realized what was in the blueprint, and how do we see, and more specifically, what are the next set of asks to the government. So with that, let's get on to the first session. The first one is going to be by Mr. Lakshmi Kumaran. Lakshmi Kumaran, sir, thank you so much for consenting. Thank you so much for being with us today. It's always been a desire that I should meet you sometime. I have not had that opportunity yet. Yes, virtually I'm meeting you. Thank you for that, sir. Yeah. Mr. Lakshmi Kumaran is the founder and managing partner of Lakshmi Kumaran and Sridharan attorneys based out of Delhi and with multiple offices across India. He has been involved in interpreting and applying various multilateral agreements at both national and international levels. He's one person who makes I would say the Indian the legal system proud. He's considered as an authority in trade, remedy laws, and TRIPs, and has handled several disputes between companies and government authorities at various levels across countries. He's been in practice for over 35 years. He's handled several litigations, High Court, Supreme Court, the highest possible authority in India. He's played a pivotal role in the and the jurisprudence related customs and excise laws in India. He was a part of the IRS initially for about 10 years before he started the practice. So very happy and very privileged to be able to, introducing you to this seminar today. Thank you so much, sir. I request you. Yeah. Yeah, sorry for this. Maybe while he's joining, maybe I'll take 2 minutes to give a brief for tomorrow as well. But tomorrow also we have 4 sessions. The first of it will be by our ASD, Additional Solicitor General of India, Mr. N. Venkatraman. I've had the opportunity to work with him on one of the cases while he was on this side of the table, though. He'll be speaking to us on GST and cooperative federalism. The second by Mr. Vashishta Chaudhary. He's already with us today. Thank you so much, sir. He'll be walking us through in terms of what has been the journey over the last 4 years from a technology point of view, and what is it that we can probably forward to over the next 12 months.
Yeah,
The
Kappa.
third one will be me.
Please.
A dashboard for the tax heads, for the CFOs, from a GST perspective. I would say or GST aspect. Third one is a panel discussion where we'll have Mr. P.V. Srinivasan, YG Parag, Ganesh Shenoy, and moderated by Prashant. So that is going to be about what are the kind of challenges which the industry has been hassled with, and how it has settled down, how the industry has kind of accepted, settled down, and how is it dealing with from a business perspective. So this is in summary for tomorrow. Rupa, has he logged in?
Hey, hello, Badrinath. This is
Hello, sir.
Lakshmi.
Sir, thank you so much for joining.
Connectivity problem. I'm sorry. Huh?
No problem, sir. Thank you so much for joining us today. I mean, while you were logging in, I just was speaking to a few sentences about your splendid achievements. Sir, I consider it a privilege to be able to be interacting with you. I've always had a desire to meet you someday. I've not had that opportunity yet. I'm meeting you virtually though. Sir, with this, I'll request you to take it from here.
Thank you, Badrinath. Thank you. Sorry for all the audience. I had some connectivity problem, therefore there was a delay. And I extremely sorry and apologize for my delay. Yes. Can we go to the next slide, please? See, what we intend to talk about today is the road traveled till now, and what is the road likely to be in the next 3 years. Very interesting topic. Like looking at the future with a crystal ball, what is likely to be as far as the future is concerned. I'm sure Badrinath did not ask me to work like an astrologer. He wants me to look at what happened in the past, what can expect for the future. I think that's why I think uh, the whole topic was given to me. So I'll just cover in a very short duration what we covered till now. And then I will try to project what is likely to happen in the future. As a disclaimer, it is my personal view. It may come true, may not come true, but there is no harm in hazarding a guess. We will say, as far as the erstwhile indirect tax structure to the present GST system is a leap forward, is a giant leap, no doubt about it. We also had, we'll talk about the initial implemented hiccups and all, and where we stand. As far as the future is concerned, technologically, how the department is moving towards e-filing, e-accounting, e-matching, e-auditing, e-assessment, etc., probably e-appeal, e-hearing also may take place. But that is on the technology side as far as the compliance portion is concerned. On the law portion or the policy portion, there seems to be a drive towards minimizing the slabs rates, not eliminating, but minimizing. When we are talking about the minimizing the rates, that itself will reduce the number of litigations, should normally. I'll come back to that later. The information which the government will be sitting on will be huge warehouse of information. And if that information is there, is there a need for filing return also may be a question. I do not know how many of you recall in the erstwhile excise regime, there used to be a filing of return called RT12 returns. And I do not know whether those assessments have ever been assessed by the department. It has been declarations given, self-assessment, and returns filed. The audits used to come and question whether the payment have been made correctly or not, or based on information they come and question whether uh, there has been any underpayment of taxes, etc., etc. So therefore, the government always picked up or rather cherry picking those defaulters by way of proactive audits or based on the information. So what happens as far as the GST is concerned, whether the returns that are being filed, will that become necessary if the entire invoicing, I'm sorry, is it echoing? Is it okay? Whether there will be a need for filing a return, or even if it is filed return, whether anybody is going to make use of it is the question. Now come to the next slide. Next slide, please. What I also see as far as the future is concerned, well, the government on one hand says that the entire GST, the fulcrum is the passing on the credit from the supplier to the receiver, right up to the consumer end. And there's been no blockage of this credit in the entire credit chain or the value chain. But we have created enough number of roadblocks for denying the credit. Once the credit chain is blocked, then the tax paid at the earlier stage becomes the cost. So this is a major problem, especially when the exports are concerned. We'll also talk about the classification disputes. And these classification disputes, how they emanate and they never die. We are also going to see more and more of cases where the liability to pay the tax is being shifted from the supplier to somebody else. We saw in the case of ocean freight, it was shifted to the importer. We saw in the case of e-commerce operators, the supplier is not required to pay the tax, but somebody else, intermediary there, he gets the tax liability. Then digital tax is going to be a major thing in the future. We already have some glimpses of those in the digital tax OIDR. But once the government tests and collects the taxes revenue there, the larger question, which state has the right to tax these type of transaction happening elsewhere, person sitting elsewhere in the world, but having a source income from here, while income tax will deal with that as a deemed income in India, how GST will go to deal with that type of things. Going by the OECD, VAT regimes in the other countries, this digital tax may become more and more. We are also seeing some exceptions or aberrations with regard to the GST structure, like Kerala food cess, etc., flood cess. I don't know whether we should call rigidity of the department. I would say attitude of the department. The congenial atmosphere where an assessee and the department can sit across the table and sort out the issues and say where we are wrong, where we are wrong, where we are right. I'm sorry, I think some echo is there. Is it okay? That is conspicuously absent. My dream would be that there will be less number of show cause notices and less number of disputes in the courts, and more situations where the tax department after an audit sits across the table and communicates to the assessee, including or excluding their consultants, whether a chartered accountant or a lawyer, discuss between them on the law points and arrive at various consensus are there and leave only those issues which are not agreed upon. And that is where the sophistication comes in tax administration. We must realize in tax disputes, it is not only the time of the assessee is taken or the legal costs are going up, there is also time for the assessee department. Their time is also being taken. Court time also being taken. So there must be an endeavor as to how we can reduce those litigations by discussing fairly, professionally, across the table, convince each other, and go on with the work. Assuming there are some mistakes on both sides, it is still worth it, considering the total gain to the economy as a whole. And we'll also talk about the complexity of the existing credit rules. We had an excellent opportunity to make this credit rule so simple, but I think the draftsmen belong to the center and then several states, they combined together and then wanted to bring in all those legacy issues brought in the complex language, and then we have got a mammoth rules of credit rules which are really, really complex. Many times I need to read the rules twice, thrice, 4 times to understand the full implication of what it is. The blockage of ITC in the beginning, the first bullet, will definitely lead to export of goods along with export of taxes, which is certainly not the aim of this GST. Next, please. Hello? Yes. Badrinath, when should we stop? What time I must stop?
It's a 5:15, 5:20, sir.
Okay.
Yeah.
Okay, then what I will do, let me not go through these slides in this particular manner. I will elaborate on kindly show the previous slide and then elaborate on that only. I'll talk extempore if you don't mind, because I must ration the time. Just go to the previous slide. Before the road, yeah. I think I'll spend on time on this and then open questions before we can. Is it okay, Ashok? Or Badrinath is fine? I am very comfortable in talking extempore.
Sure, sir. Sure.
Let us now look at the blockage of ITC in the case of inverted tax structure. India has been using tax, especially indirect tax, as an important tool for achieving socio-economic objectives. And any government, whether the center or the state, cannot afford to have a single uniform rate for all commodities and all services. Let us be clear about it. If we have to tax the same rate for the food grains, processed foods, and also luxury goods, there will be revolt in this country. And we must take lesson from our father of the nation, Mahatma Gandhi, who fought against British on the question of levy of tax on salt. It is a symbolic fight which he did, basically to ensure that you don't tax those items which are daily needs of people. So therefore, we have a different philosophy as a country, and rightly so. So therefore, we are bound to have different rates of taxes, and therefore different slabs will stand. It will not be eliminated at least for the next 30, 40 years. Forget about 3 years. But in the process, what we are going to get is the classification disputes. The assessee and the department are not only look at the description of the goods in the third column, but their eyes always travel to the last column of the tariff, which is the rate. An assessee wants to see whether he can get classified under a column which is giving the lower rate, but the tax department want to charge the item under a particular heading which is at a higher rate. This is the historical dispute in indirect taxes. I have seen for many, many, many years, and this will continue. The reason we are not going to have a single tariff heading or a single slab and abolishing all exemptions, then only this can happen. So in my lifetime and your lifetime, it is not likely to happen. So therefore, the classification disputes, because of the different rates and innumerable notifications, read with the rules, end-use notifications, end-use conditions, not elegantly drafted legislations, will definitely result in significant amount of litigation. Considering the number of assessees and the tax departments, I can easily predict that the classification disputes are not going to abate. It will continue, or rather it will multiply. If not like COVID-19 virus, it could be even worse. This also brings it to the question regarding the attitude of the department. If the department were to accept the decisions of the courts, decisions of the WTO, decisions of the World Customs Organizations, decisions of the cross-ruling with US and Europe as a possible precedents and accept it, 90% of the classification disputes can be eliminated. But unfortunately, even when the dispute is settled by the courts, including the Supreme Court, the department still fights. This point was not considered, therefore we will fight. I am not saying assessee is not doing, you will also do the same thing. So therefore, both the parties, wherever they lose at the lower level, they try to take a chance at the higher level. Unfortunate, but it is happening. I am not talking like a lawyer, I am talking like a citizen of this country. So therefore, there has to be a paradigm shift in the way in which the department thinks and acts, or the attitude. And the acceptance of a higher ruling as a probable ruling and then go on with life is the next step for resolving the dispute. And last but not least, even where the legislation being so complex, it can give rise to more than one interpretations, more than an understanding. When the less charge demands have been made, there is always an accusation that it is because of fraud or collusion. And nowadays I see one more stand by the department hey, I have given you the self-assessment procedure. I am not sitting in your factory and assessing the goods and the goods are being cleared. I am not sitting in your office and then finding out whether the service tax being paid correctly or not. I trusted you. So therefore, any mistake made by you, any bona fide mistake also, I will say malafide. And any number of jurisprudence on the subject with regard to what exactly meaning of suppression, what the meaning of fraud, what is willful misstatement, any number of judgments, in spite of them, the notices are being issued for staggering amounts. And therefore, apart from deciding the merits of the matter, enormous amount of time being spent to prove that my action was bona fide, the demand for a period beyond the normal period is not sustainable, penalty and the threatening prosecution is not the case here. Considerable time is being spent by the assessee, by the lawyers, by the tribunals, and by the courts in deciding in a particular case whether there was a malafide intention or not. I think it is a waste of time for all the people across the board. If only the department considers, hey, there is a reasonable doubt in this particular case, and accordingly, we should give the benefit of doubt as far as the limitation is concerned. I remember when I was arguing matter before the Supreme Court, before Justice Kapadia, then he was. After arguing for about 3-4 hours, he said, Lakshmi Kumar, fine, but I'm going to decide the matter against you on the merits. I said, I tried my level best. If I am not able to convince you, I can't help you more than that. Then my lord asked the question, limitation. Then he said, limitation, Lakshmi Kumar, I think your people have done something wrong, etc. And I said, my lord, I am before this court. We argued for more than 3.5 hours. The rules are so complex. It took so much time for my lord to come to the conclusion in favor or against. Do you think a person sitting in Trivandrum or Kerala or somewhere, etc., has the ability to think like what you are thinking and still committing a fraud, etc.? He said, I am with you on this point. And he wrote, in the complex cases of this nature, the benefit always has to go to the court, to the assessees. See, these types of things must be understood at the lower level. Unfortunately, that is not happening. So therefore, if you look at the classification disputes, because of the different rates, different slabs, and also because of the innumerable notifications, I don't want to brand all those drafting as a bad drafting, a bad draftsmanship. I'll put it inelegant way of drafting it, giving ambiguity. And that ambiguity always gives in, more and more disputes on this. So I would expect that if the department and the assessees can sit together and discuss the matter across the table, many of the disputes can be resolved and court's valuable time can be saved. I do not know if it can happen, but at least we can have a wish list for this. When I was on the about different slabs, it is quite possible that the output or the finished goods manufactured by you could attract lower tax than the tax paid on the inputs or the capital goods, including input services. It's quite possible. On one hand, you get happiness. Yes, my product is attracting lower tax. The government has recognized that it is used for common usage. But that doesn't realize it has got negativity. Namely, you'll be sitting on a huge amount of credit balance which you cannot utilize. Then the question came regarding how do we retrieve the problem. The government came and said, okay, keeping different rates is not your wish, it's our wish. And in case you have excess credit I will give the refund of the excess credit. The benevolent provisions. We thought with this, the problem can be solved. Excess credit can be taken as refund, and therefore I become revenue neutral. And whatever taxes paid by me can be passed on to my customer. Then comes the amendment, interpretations. Whether the excess credit is arising out of input tax only, could also include the input services. How can we restrict that particular portion and give the refund only for the input tax and not input services? All of you know, I don't want to take your time on this. The original formula, the rule provided for the input services also, but later on the rule was amended, the formula was changed, and litigation started, and different court took a different opinion. Ultimately, final decision same says that the government is right. We are not on the question who is right or who is wrong. Philosophically speaking, whether the government has done the right thing. If we believe that the taxes paid in input services are fungible, that can be used for payment of finite goods tax or service tax under the GST regime. What is relevant is at the time when the goods enter the factory premises, whether they are eligible for the credit or not is the question. All of you may remember, in the past days, the excise officer used to sit at the exit gate and see whether he has paid the taxes correctly or not at the exit at the time of good being cleared. After the credit system was introduced, the focus of the department is now not on the exit gate, but on the inlet gate. In the in gate, at the time when the goods are coming in, he is examining whether these goods, tax paid on which, can be taken as a credit or not. Once he says you are entitled, then by the Supreme Court judgment, you become entitled to the credit. I am deliberately entitled because it becomes vested right. You have a right to use that credit as if it is cash money with you. But when the government comes and says, I'll give the refund to the extent of the input tax paid according to the formula, not input services, not on capital goods, we feel somewhere, I call bad taste in the mouth. I concede the government has the power. Tomorrow, the government can come and say, I am not going to give the refund of input tax rate also. You can't say, no, I will not, you're wrong. That's the policy decision. We are running short of money, we don't want to give the credit to you. Fair. But in a system where input tax and input services tax are fungible, and the different rates of taxes are kept, not because of me, but because of the legislative policy, to make an amendment and succeed on the batch saying that it will be restricted only to input tax credit, not the input services, certainly not in good taste. I leave it there at the point of time. We then come to the so-called soft targets. I would say soft target may not be the appropriate word. I would put it this way as convenient tax, convenient targets. I think that's a better word. We always know, and the courts have always given that liberty or the elbow room to the legislations as when to tax, how much to tax, where to tax, from whom to tax. All those things are given a lot of liberty to the tax department or legislations. In our country, the leviability can be questioned. Whether a particular activity is taxable or not can be questioned without doubt. Again, the constitutional entry we can question. Whether legislation is contrary to the virus or not, we can question, no doubt. But once we concede that levy is there, I am not able to find a good reason for saying that the levy is illegal or unconstitutional. Once you say it is intra-virus, not ultra-virus, the question then would be, why are you taxing me? You should tax somebody else. Can you ask the question? And from Jalandhar rubber onwards, Supreme Court has held that once the levy of tax is accepted, the point of collection, the time of collection, from whom to be collected, when to be collected, how much to be collected, all be in the legislation. They cannot be questioned as virus or not. So, using this principle, the government always finds out from a particular taxation, this particular supply is to be taxed. Normally, the rule is the supplier has to pay the tax. But you are now seeing more and more the goalposts are being shifted. We are now finding, for the convenience sake, the government says by notification that I don't want to collect the tax from the supplier. It is more and more difficult, but I would like to collect the tax from third party. I think lawyers are the best example. We provide the legal services. There is a levy, there is no exemption. But the levy is now to be paid by the client who received the services as the recipient. So here is a situation where the supplier is not paying the tax, the burden is taken over by the recipient. So these are called reverse charges. This is a famous thing which is happening. When you look at the whole Customs Act, the importer is merely an importer. Normally the supplier is the exporter. You don't go and collect the tax from the exporter. You collect the tax from the importer. Actually, the reverse charge started from the day one in the 18th century. So it is not something new. So therefore, the supplier alone has to pay the tax is not the relevant thing. If the supplier is many and the cost of collection of taxes from them is going to increase, or it is not convenient to collect from the taxes from them, the legislation can always shift the levy to somebody else. Like in the case of rubber cess, the producer of the rubber plantation, they are not required to pay the tax. It will be paid by the users, tire companies or the belt company using the rubber. The court said yes. As far as the levy is concerned, it is perfectly valid. So now we are now seeing with regard to e-commerce operators, and more of situations are coming in that the supplier is not required to pay the tax. The liability is now taken over by the e-commerce operator to pay the tax. Now you get into some more difficulties, namely, when this notification is issued in this manner and say you shall be deemed to be the supplier of the goods or services and pay the taxes accordingly, what happens is wherever exemptions are available to the original supplier, that is being negated when the supplies are made through e-commerce operator. I have some serious doubts with regard to validity of some of these notifications. While you can shift the liability, can you extinguish the exemptions which are otherwise available? Why I am saying this particular point is these exemption notifications, shifting, etc., ultimately had to answer the test of equality under Article 14. If the original supplier himself is having online sales of services, if he can enjoy certain exemptions, and if the same supply of services is done through e-commerce operator, when you shift the liability to the tax from the original supplier to the e-commerce operator and deny the exemption, then you are placing equals in unequal footing. So these are the questions which will come under the constitutional levy, whether are you treating equal unequally or treating unequals as equals. Both are bad. But we are seeing more and more of these types of shifting the liabilities. I was also talking about the digital tax. These are larger questions which will come up with regard to powers of the parliament to legislate extraterritorial jurisdiction, certainly granted. Constitution provides for it, Supreme Court has blessed it several times. When a service provider is elsewhere in the world, say in England or Amsterdam, has no place of business here, but there are recipient of services here, can there be, and the recipient is not required to pay the tax because the individual concern is B2C transactions. In the case of B2C transactions, when B is required to pay the tax, when the government does not want to collect from the tax from the C, that is the consumer, they are now going to the supplier and asking to pay the tax in India by taking registration, etc. These are extraordinary situations, and this is being debated. EU has implemented in a different manner. We are implementing it here. OECD is thinking about it. So it is an interesting area where the digital tax being collected here and compared also with the equalization levy under the income tax. So the services being rendered through online systems, how lack of human intervention can actually result in more taxes to the source state is an interesting phenomena we are seeing here. Badrinath, I think, should I stop here? I think somebody should ask questions or something because there are other speakers also from 5:15 onwards, I'm told, right?
Sure.
And I can tell you, Badri, I don't think a topic of this nature can be talked in 45 minutes or so, and especially a person like me who is incapable of compressing the thought process in a short period of time because I am used to arguing before the courts where we have enough elbow room. But in any case, I take this opportunity to thank you for inviting me to talk on a subject which is very interesting. You actually asked me to look at the crystal ball and then look at the future. And luckily, you asked only for 3 years, not 30 years. So I tried to give my thoughts on the particular thing, whether I do not know whether it met with your approval or acceptance, I do not know. But I thought I should share my thing. And I'm sorry I did not use my normal other slides and all those things, etc. Because when I saw the audience, I felt inspired that I should talk extempore rather than go through the slides in a methodical manner. I stopped.
Thank you, sir. Shekhar, yes, sir. Sorry I could not join at the beginning. Thank you so much for being here. Extremely thankful to you, sir. That's all I would say on behalf of BCIC. Sorry I missed at the beginning because I had other meetings that was going on parallelly for me. My sincere apologies to you because I don't want to miss your sessions, but this is the first time I'm missing it. Sorry about it, but great. Thank you so much, sir.
Shekhar, you have not missed anything, don't worry. Badri will brief you on that.
Sir, I would look at it this way, sir. One thing definitely you mentioned digital and technology. I think that is the way forward, undoubtedly. In fact, I'm glad you mentioned because I have one slot tomorrow for about 30 minutes, and I'm also going to be spending a few minutes on that. And yes, sir, certainly you brought out some concerns as we look ahead as far as GST is concerned. One is non-adherence to the tax structure, which is the Kerala flood cess or the likes. Then maybe complex credit rules. All of us, sir, in fact, want to believe that the credit system is going to become more simpler and it's going to be seamless. But yes, it was very interesting to hear you out on those aspects. And certainty on tax positions is something which we are definitely look forward to, sir. What would you say on that?
Come again?
Certainty on tax positions, the way the advanced rulings are, the way the amendments are, if I can take maybe 30 seconds, when I had heard Mr. Manoharan, he was the president of the ICI those days when I was doing my articleship. He had mentioned with respect to certain amendments in the income tax. He said, look, a very small story, sir. There was a train which was going, and the engine driver spotted one guy walking on the track. So, he honked, but he didn't move. Then finally, there was an accident which happened. So there was a committee set up, and they called the engine driver saying, look, you're such a senior guy. How could you let this happen? So his point was, you should have run over him instead of putting 500 or 600 people's lives at threat. So the driver said exactly that. He said, that's exactly what I did. But when I decided to do that, he ran off into the fields.
I would put it this way, Badri. I'll give a mythological story for this. There was a person who was born and then he was destined to die at the age of 16. And the mother went and prayed to Lord Shiva, saying that it should not be, this is unfair. He is such a brilliant person, he shall not die. You must do, you have an extraordinary power. Why don't you give him a longer life? And Lord Shiva said, yes, I will use my extraordinary power, but what was destined should necessarily happen. Then the mother was confused. So what he said was, he will live long life, but every day there will be a big accident as if he is about to die. So Nityagandam Purnais, that is, every day there will be an accident, but he will live. So our tax system is like this. Certainty you are asking for. Your certainty is for a temporary period of 1 year, if you are lucky. It could be even lower or smaller, shorter. And even GST was brought in such a short notice. And many legislation all over the world are legislated, even 2-3 years time for the assessees to get used to it, run parallelly, put your own systems in place, put the internal auditors, softwares, solutions, all those things be properly made, run parallelly, and then ultimately switch on to the systems. But we don't believe in that. We act and then start thinking. We don't have to think and then act. So that's the way in which India operates. And then the amendments are galore. The only community or the class of people who are benefited in this is the lawyers community.
Understood, sir. Understood. Sir, there are a few questions, if I may just read them out for a thing. Please enlighten about inverted tax structure. I think that's a long discussion though. There is one more, sir, which says, do you see any contradictions in future in advance rulings?
Sir, you talked about certainty, and in the context you talked about advance ruling. When you talk about the advance rulings, the assessee wants to ensure that he can sleep well and his tax rates or the value is correctly determined, or the eligibility credit is also determined correctly. But what we saw in the last few years, there are many decisions of advance rulings. I am not saying it is in favor of the revenue or favor of the assessee. I am not on that. I would say whether legally correct or not. I have a very serious doubt about the correctness of many opinions or the classification decision, advance rulings. I have very serious doubts. Many of them need to be necessarily be modified. So the certainty has become uncertainty.
Okay.
So what requires is, see, we have a system of wonderful system of bringing advance ruling as a measure for bringing certainty. But we have used the people who are not capable of deciding in a correct legal manner, and therefore the system getting collapsed. That's the problem. There is nothing wrong with the system. The rulings are clear. The rules are clear. But implementation, there is a lot of gaps.
Sure. So there's one more. Supreme Court judgment on the Westinghouse subsidies being the basis for department to open up SETI classification topics. Your views on this and how to prepare for the upcoming litigation?
Very interesting. I'll take about 3-4 minutes. I hope I am intruding on somebody else's time. I'm feeling guilty.
Okay, sir. We'll take another 2 minutes. Shivdas sir, we'll take another 2-3 minutes.
Oh, Shivdas is next speaker.
Yes, sir.
I can tell him and ask him. No problem. I have a liberty in asking him always. I hope, right, Shivdas, you don't mind, no?
Certainly not, sir.
Okay. So, this is a classic case of a judgment of the Supreme Court deciding the classification of rail part, whether it is falling under the Chapter 86 or not. Assessee argued there that the part should be railway part, therefore the rate will be lower. And there is a conflict between two section notes, and so Supreme Court decided that the later rule will prevail over the previous one, and accordingly they decided that they are indeed parts of railway coaches or locomotives. And that principle is equally applicable for automobile parts. The revenue lost the matter in that case of Westinghouse, and they are using it to collect the higher taxes on motor vehicle parts, where the necessary parts will get classified at different tariff item, attracting lower rate of 18% or even lower. Revenue wants to collect it at 28%. The question is, how do we overcome? Today, the Article 141 judgment of the Supreme Court is final. It is binding on everybody. Binding on you, binding on me, binding on the department. But with due respect, we would say that the decision of the Supreme Court is legally incorrect. The reading of the particular section, it's certainly not in line with international understanding. That case ultimately may have to be argued before larger bench to get it overcome. But in the meantime, the tax department utilizing it and then reversing the classification of the automobile part from different tariff item to Chapter 8708 is not correct, and especially invoking the longer period of limitation is actually not correct. Maybe it would be a good idea for their chambers to make a representation to the government to amend an explanation to the section note to put in place what exactly the correct position in the international practice. And that budget is on 1st of February. It is still not too late. We could introduce an amendment. It is not actually deviating from the international rules. We are not amending to deviate from there. We are amending it to fall in line with that. So therefore, we will be WCO compliant. We are not WCO defiant. And that is the way in which I think probably the dispute can be resolved as far as the future is concerned, also for the past. Many times the government comes and amends the law to overcome the judgment of the Supreme Court, wherever the revenue stakes are involved against them. This is one situation where I think they should amend the law to put in place the right thing in the right way and fall in international practice. Thank you, Badri.
Thank you, sir. I'll maybe cut it off. Sir, thank you so much. Sir. It was a pleasure to hear you on this topic, to get a peek into how you see the GST going forward. Thank you so much, sir. Thank you so much. Sir, if time permits, would request you to maybe be with us for the next 2 sessions. Thank you so much, sir.
I cannot promise, but I will certainly hear for some time Shivdas.
Sure.
It's always a pleasure to see him. I may log off a little later because I have other commitments.
But just a small announcement. Sir, will on behalf of BCSC, with the amount of love and gratitude, will be sending a small memento to you by courier. Kindly accept it. Kindly accept
it. Not necessary.
Small, It will be very useful for you. That's all I would say. Thank you so much, sir. It's a small amount of love and gratitude. Thank you so much, sir.
Thank you, Shekhar. Thank you, Badri.
Thank you so much.
Welcome, Shivadas. Best of luck.
Thank you, sir.
Welcome, sir. Shivdas, sir. We'll hear Mr. Shivdas now. Mr. Shivdas actually needs no introduction. He's our mentor. He's the mentor for the IDT committee. I actually call him at least once a week, sir, to ask you what to do, what not to do on various aspects. Thank you for being with us. Thank you so much, sir. He was the chair, and I learned a lot from him while I was the co-chair with him for the Indirect Taxes Committee. More than 25 years of standing at the bar. He's a senior advocate, specializes in the full spectrum of indirect taxes, including the WTO law, and is being consistently ranked in the top 10 indirect tax practitioners in India. Sir, it's a privilege to hear you out. But I take maybe only 30 seconds before that. Sir, we heard from Mr. Lakshmi Kumar on certain legal aspects, the way he sees going forward. And yes, Mr. Shivdas is going to continue on that, cover that as well briefly going forward. So, agents of the indirect tax laws to hear from them what their take on the legal issues is. Over to you, sir.
Thank you, Badri. Good evening to all of you. It's nice to be part of the webinar again with BCIC. We have never lost touch with BCIC, even though Badri is now chairing the Indirect Tax Committee. We have always been discussing on any number of issues. Now, when this request to discuss this webinar came to me, I was looking at the topics which all the speakers are to talk. And I found that most of them are at a policy level. In the sense that what has gone wrong in GST, what could have been done, which would have been better, and what do we expect in the future, how will it span out, etc. Now, during the course of the last week or so, a number of companies did get in touch with us and had sent their inputs, which they think we should discuss in this webinar. I've also looked at some of the issues which we have handled in GST in the courts. Because in my opinion, at the end of the day, all the companies are really concerned with the problems they face on a regular basis and how they expect the government to react proactively in some of the issues. So what I have done is, because if you look at the legal issues that have emerged in GST, both silly issues, substantial issues, etc., there are many. So what I have done is I've identified about 6-7 issues, which according to me continue to be the pain point today for various companies, and which the companies look forward to the government to come out with maybe a one-time solution or a continuous help for them. Now, I would not be using any slides. Badri, contrary to what I normally do, I would not use any slides this time.
Sure, sir.
So, because the time is quite short, and therefore I thought I will talk on the issues straight away.
Sir, sorry, you take your time. No problem.
No, okay. Now, the first issue which I wanted to really highlight in GST, and which most of the companies are definitely disappointed with the approach of the authorities and the government, is the Tran 1 issue. Because when I read the provision, it is simple, straightforward. We have a section that says you are entitled to carry forward whatever credit was there in your return. There was a rule that said you have to file your Tran 1 form within a particular time. Of course, very surprisingly, you had a rule that says you can also revise the Tran 1 form in the same date. In fact, in one of the matters, the High Court did ask, how do you expect an assessee to file a Tran 1 on 27/12 and revise it also on 27/12? So the reply from the government was quite strange. They said the revision will apply only to an assessee who files his Tran 1 on 26/12, so that he gets 1 day time to rectify it, and not to a person who files it on 27/12. These are all the rigid attitudes that were being displayed in the courts. And quite shockingly, I mean, I don't know how many of you would know, the total number of writ petitions that have been filed on Tran 1 across the country is about 400 plus. And according to me, I think it's the biggest litigation in the indirect tax system on a particular issue. To my limited experience and knowledge, I don't think I have seen on a transitional issue so much of disputes. Now, different types of assessees were there who went to the courts. Some assessees who filed their Tran 1 in time, who revised it in time, but later on found that there were some mistakes which they had committed. In fact, there was one case where there was a mistake in entering the figures in the appropriate column. Instead of column number 5, they wrote it in column number 6. There were another set of assessees who filed it in time but did not revise it in time. And of course, the third set of assessees who who could not file it because of the technical glitch. Now, all of them went to the high courts. And most of the high courts, excepting maybe about 3-4 decisions, have consistently taken a view in favor of the assessees. And if you read the decisions, there's a uniform principle that is laid down in most of these decisions. Like the credit is indefeasible, it's a vested right, because you're not talking about a credit in the GST regime, you're talking about a credit which is otherwise eligible under the pre-GST regime, and you're only carrying it forward. Some courts took a view that it is a property, right to property under Article 300A. And there was some of the courts also looked at the provisions to say that the government does have the power to remove difficulties, section 172. Therefore, why is it that these problems are not being addressed? And most of the courts ruled in favor of the assessees and then laid down time limits by which the assessees have to file their claims manually, etc. Of course, I think all of them are bunched and are before the Supreme Court. And most of the assessees feel that the relief they have got from the High Court is more illusory. And ultimately, we'll have to depend on what the Supreme Court decides. Now, therefore, the one question that comes up is, should the government wait for the Supreme Court to decide on this issue? Or should they come out with a one-time measure? All the assessees who have transitioned into GST on 30/6/2017, whatever credits are available to you, most of it is in the return is fine. If otherwise also you take, after all, at the end of the day, you are verifying the correctness of these figures at a later point of time. In fact, there's one Allahabad High Court decision that has taken a view that all the assessees, not only the one who are as petitioners before them, but everybody else also should be given this opportunity. Should that be the proactive nature approach of the government? That's what assessees look up to. In fact, this recent decision of the Supreme Court in Bharti Airtel, we remember it most of us remember it for the reason that it says you can't rectify a return unless you do it in the same month. But there are some observations of the Supreme Court on how exactly is the system. If I remember correctly, they said it's in the nature of a facilitator to either feed or retrieve any information, and the primary source of any information is the documents, invoices, or the books of accounts. Therefore, if that's what the Supreme Court has said, should it not be a proactive approach of the department to come forward and say, yes, we will solve these Tran 1 problems in this manner? So that's one issue which most of the companies are looking up to. The second is the transition of cesses. All along, we have always considered cess to be as on par with excise duty. Therefore, if excise duty is allowed to be carried forward, there's no reason why cess should not be allowed to be carried forward. From a common perspective, you leave alone the legal connotations of it. In fact, Supreme Court did say in Bajaj that cess is collected as excise duty even by their own circulars of the government. Therefore, why is it that it should be treated differently? A different bench of the Supreme Court in Unicon did take a different view, but we are again talking about a transitional provision, a cess that is paid for by the assessees, carried forward in the return, reflected in the return, and therefore should it not be given as a credit. Because I'm aware of the Madras High Court decision in Sutherland. With due respects to the decision, there are some observations which I'm not too sure how right they are. Like, for example, the decision that the corresponding credit is available, it becomes redundant as there is no utilization of it. I'm not too sure how these approaches would be appreciated by the Supreme Court, whether they would approve it or not, that's a different point. But should not the government come forward and say that, yes, says you will not allow you to transfer, maybe not allow you to transition, but then you apply for a refund wherever it is possible. In fact, there are a few tribunal decisions that have taken a view that you can get a refund of the educational cess. So should that be permitted? All this will be big reliefs to the companies in terms of amounts which can be utilized by them for payment of their output liabilities. The third is the inverted duty structure. Now, effectively, the hopes of a number of companies who had a lot of credit on account of input services, credit of input services being higher in the goods, those hopes are, I'm not too sure what to say, but has been laid to rest by the Supreme Court in the decision of VKC. The only redeeming feature in that decision is that the Supreme Court did acknowledge the fact that there are certain anomalies or aberrations in the formula that has been prescribed, and therefore maybe the GST Council should look into it and resolve it. How should the government react to it? For the number of companies who are in receipt of greater services, and therefore there is a credit accumulation, now would not be in a position to claim refund because the provisions of Section 54, both in terms of eligibility and the formula, essentially bars it. So how will you give a refund of it? Will this credit remain accumulated in the books of accounts? Because if you look at a corresponding provision, for example, I think Section 49(6) or something, that says whatever excess amount is there in the cash ledger can be claimed as a refund. So how do we treat what is there as an excess credit in the credit ledger? Can the government come forward and say, or enact a provision to say that even in terms of these inverted duty structures, they can claim refund of it in terms of similar provisions? Because these are all, unless you rationalize the rates of tax and prevent the inverted duty structure, which you may do so in the future. But what happens to the past? Should the companies be parking these amounts in the credit ledger and then keep utilizing it over a period of time? For how many years, we don't know. So how do we look forward to this issue even after the Supreme Court has decided? Do we take a view that yes, Supreme Court has decided and therefore that's the end of the matter? Now, the next issue which I thought also should be looked at is the interpretation of Rule 9610 of the rules. All of us are aware when you export goods which are considered as zero-rated supplies, in terms of Section 16, you can export it on payment of tax and then claim a refund of it, or you can export under a bond and claim refund of the unutilized credit. I remember in the initial stages, a number of assessees were utilizing their credit for payment of the output tax and were claiming refund. Government also has been granting those refunds. Now, subsequently, there was some thought process that most of these companies were using fully exempted inputs. For example, if you are an EOU or if you hold an advance license, so you're using fully exempted inputs for the purpose of export production. And the credit which you otherwise had on account of purchase of duty paid inputs, you were monetizing it, you were encashing it. Based on that, there was a discussion at the GST Council meeting, and then they said we need to amend the law in order to prevent this monetization. Now, we are not on whether that step is right or not, whether that really had any substance in it, because there was never a one-to-one correlation between the inputs, the credit, the export product, etc. But for some reason, the group of officers who decided on this did take a view that there is an unintended utilization of credit, and therefore that has to be stopped. But while doing so, while implementing the amendment, they put in a condition, retrospective and prospective, to say that if you export goods on payment of duty, and if you have either availed any of the schemes like your EOUs or an advance license, etc., then you will not be entitled for the refund. There's a complete investigation happening across the country on this. Most of the EOUs, advance license holders, have been issued notices on all this. Now, we were really examining, let's assume this rule gets implemented. How will it get enforced? How will you do it for a company who claims refund? How will you do it for a company who has got two streams of export? Somebody who exports on bond completely, somebody who exports on payment of duty completely, and has clear distinction between the inputs used in both. Now, there the department has been taking that as an entity. You have utilized inputs in the manufacture of export product. Even though the streams are different, we will still deny you the refund, which I thought was completely unfair. Number one. Now, in 2020, they made an amendment to say that if you pay the IGST, then you will not be hit by the restriction because you pay IGST and you take credit. A number of companies did contemplate doing that because you can take credit of whatever IGST is paid. But they landed up in situations where the bills of entries were not being reassessed. So how do you take credit? The authorities were turning around to say that we will not allow you this credit because it was not there originally. How will you take it? Will you make an entry in your 3B manually? If the bills of entries are not reassessed, how will you take this amount? How do you reflect these amounts? So these are all practical problems which are surfacing even after the amendment that has been made in 2020. What will happen to the interest payable on the IGST? Because you are talking about periods from 2014. This amendment has come in 2020. So are we liable to pay interest of 3 years? And this amendment has come by the government's own making of giving it a retrospective effect. In that sense, would an interest be applicable? The companies are really contemplating what, or even thinking, what is the use of this amendment? So what do they expect from the government? They expect the government to come forward and say, yes, there are practical problems in enforcing these amendments. Going forward, this is how we would like you to do. You have two separate streams. Wherever you want to claim the BCD exemption, pay the IGST, take the credit. You have your bill of entry done in the same manner. For the past, we will give you the credit. We will not claim interest. And this will operate registration wise. I'm only thinking if that is being done, how beneficial it will be for the companies. Your purpose is served of not allowing monetization of credit. At the same time, the interest of the business is served by being very clear of how these notifications will be implemented in the past. The last two issues which I thought I will highlight is this. The intermediary issue is one that is now catching the attention of a number of companies. Intermediary has been in the statute book from 2012 onwards. There has been a definition of intermediary in the service tax. It has continued in the GST regime also. And the intermediary is now more important because it is actually an impediment to the normal rule of export of services. Now, there are circumstances where the authorities are reading the provision so broadly that any export of service can get covered under intermediary service. Because the definition refers to agent or any person by whatever name called. What is the scope of any person by whatever name called? It also says who facilitates the supply. What is the scope of these entries? All of us are aware about the circular they issued in 2017 initially, and then in 2019 in the context of BPO services, and that was later on withdrawn, and now the recent circular of 2021. In fact, in my opinion, the recent circular of 2021 does put in some sort of clarity on the issue. But the question is, how will this circular be interpreted by the authorities? You can issue a circular, but if the circular is interpreted in a different manner, every case can be distinguished from that circular. So should there be more mandate to the authorities to say, apply the circular strictly, apply the definition very strictly, apply to the past disputes. Going forward, be very strict in interpreting this definition. Don't apply it in every manner. That's something the companies are looking forward to. Because we have had situations where even after the circular, the advanced rulings are taking a different view, saying circulars will not apply. High courts are, the argument of the government councils before the high courts are different. So the circular was to solve a problem. What is the follow-up on the circular by the government to see that the problems are solved? Does it really create the business environment which the companies want? So that's something which the government should really proactively look at and see how the circular will get implemented. And of course, the last issue is on the over-dependence on the systems. See, when GST was implemented and GSTN was made as a system, the whole idea was that right from the time of application for registration to the stage of assessment, the whole thing is electronically driven, so that there is less of time spent both by the assessees and by the authorities on each one of these procedural issues. As I said, the Supreme Court's observations on the system is quite enlightening, where they say it is only a facilitator to feed the information and not the primary source. But the difficulty is when we keep seeing the issues that are coming up as a result of the implementation or the strict adherence to the GSTN system. For example, suppose an assessee, instead of paying 1 crore, types in as 10 crores for whatever reasons, and then it gets debited as 10 crores. Thereafter, he realizes that the 10 crores is by a mistake. Therefore, he wants to take back the 9 crores. How will you do it? The easiest thing is to take that 9 crores back as credit in your GSTR and 3B. But then you don't have a corresponding document to take as a credit because it is part of a huge credit taken earlier. Now they issue a circular saying that refund is not permissible. Ideally, a refund should be given. But they say refund is not permissible because you have to use it for your future liabilities. How do you do it? The system. Do you park that amount separately and keep deducting it from the output liability? what will happen to your GSTR and 1 where you show an output liability and a GSTR and 3B where this knocking off has to take place? In fact, in one of the matters, we did demonstrate to the court that their logic of adjusting it from future liability is just not workable. So any number of instances like this, where a GSTN is creating problems for the assessees, need to be looked into. For example, if somebody pays, there is a difference in his cash liability. He pays the entire amount through credit, but still he is not able to pay the cash liability for whatever reasons. The Act provides for payment of interest, but the system doesn't provide for him to utilize even the credit after 2 months because he's barred from filing his returns. Is this what the system is meant for, when the law otherwise doesn't have any such restriction? Now we had somebody coming to us and saying that we have already filed one refund application for 1 quarter, sir, for one time period. We can't do it for the same time period once again. We asked why. Why you did not file it? Because he said my FIRCs were not received. So once you receive the FIRCs or FIRCs, you should be in a position to file it. There's no restriction in law, but the system restricts you to file the refund applications. So these are all the problems which companies are facing on a day-to-day basis. Each one of these measures each one of these problems have to be looked into by the government when they are looking at GSTN as a facilitator. If these problems are solved, maybe GST could be an experience of pleasure for the companies. But let's not use the systems to create more difficulties for them. There are a number of issues that are coming up like this. So in my opinion, if these 5-6 issues are looked at by the government, and especially in an experience which you are seeing it for the past 3-4 years, and if you try to solve it in the best possible manner, because we are at a stage when maybe some of these problems can be addressed even in the ensuing budget. A one-time solution for all this, each one of these problems, to really make the experience of living with GST a pleasurable one. This, I thought, is a snapshot of some of the problems which we are facing. I hope we as BCIC, and then we take it up to the government to give these suggestions to them, and hope the government also can proactively respond to it. Thank you for patiently hearing me out. If you have any questions, I'll be willing to answer. Thanks, Badri.
Thank you. Thank you, sir. Thank you so much. So there's one question, if I can read that out for you. It says a retrospective amendment to section 140 relating to cess transition. Recently, Bombay High Court held, since amendments are not notified, STNs are not valid. Madras High Court decided against the assessee. Sir, do you think till Supreme Court decides this issue, assessee has no option but to litigate and keep the issues open?
See, what happens is, if it has not been notified so far, then it has no validity in the eyes of law, number one. Now, the Madras High Court has gone completely on a different point. They have taken a view that you can't take credit of the cess because at some point of time, this cess were not having as an output liability. Therefore, it has become as a sunk amount. So that view is completely different from what the Bombay High Court has taken. So till such time it is not implemented, the main argument of what is the purpose of cess and how it should be given as a credit will always be available. But once it is notified, then it has a different context, because then they can turn around to say that what the government wanted to give is clear from the retrospective amendment and therefore it cannot be transitioned. Like, for example, what they have done in this inverted duty structure, where they say the government has the authority to decide what to give and what not to give. So to that extent, it could make a difference.
Okay. Okay. So there's one more continuing. For distinct entities having same PAN, can government think of centralizing audits so that assessee need not undergo the exercise in multiple states, similar to LTO concept?
I don't know. I think this has been coming up for discussions any number of times.
Yeah.
We have also been telling from the chamber and in our various webinars also with the authorities, we have been suggesting that maybe you should try to do this to solve the problems, because you can't keep giving the same set of 100 documents to each state. I'm not too sure how the government is would be willing to react to it, because the central government, I'm told, is for it, but I think the state governments are resisting it. I think that's what the feedback we get from some of the officers. So I'm not too sure how that will happen. But yes, they can come out at least with some common methodology, that even if it is being done. Like, for example, there are some provisions to say that if the state officer takes up an issue, the central will not do it, and the central takes up an issue, the state will not do it. Similar to that, some sort of provisions can be there, by which at least we can consolidate the giving of information.
So, sir, just to add to that, this issue did come up in the GRC meeting earlier this week, saying there has to be some uniformity in the way we approach, the way the tax offices approach the conduct of audit. So the kind of response is, there is a manual that is being signed both by the central government and the state. So that is what are the field formations the officers following. So maybe that is the answer to that.
No, the problem in that manual is, that manual is to be followed by every officer. Now, that manual also says that you are supposed to consider whatever documents you think are relevant for the purpose of audit. Now, each officer can think that this particular, for example, a balance sheet is relevant for me for my inquiry. If 20 states start saying that this is relevant for my inquiry, then we'll end up in the same position, giving the balance sheet to 20 different companies and trying to correlate or completely match the entire figures and then keep giving. You'll keep doing only that.
True. So there's one, not sure if how it is connected, but let me just read it out. Tran 1 we have not filed. Please advise.
Difficult to advise in this open session. I mean, you have not filed, what do you expect me to advise? I mean, you can only go to the High Court and say, sir, pardon me, I have not filed it, please give me the benefit. That's all. So there is nothing which you can much do, except if the government comes forward. That's where I was referring to that Allahabad High Court decision. That decision is quite a big one. And at the end of it, they make all assessees who are before this court, not before this court, everybody can get a one-time chance. Something like that, maybe the government comes forward, they can do. So I'm only thinking that even when we go to the High Court and we get orders, we don't get the credit. How do you expect people who have not done anything to get the benefit? That will be slightly difficult.
Sure. There's one more, sir. Not sure how it's connected, but let me just read it out. Is GST applicable on other income shown in the balance sheet on account of write-off customers? No, how can it be income if it is a write-off? I'm not able to follow that. Anyway, mainly if customer is bankrupt or the project did not take off.
No, then you come back to the fundamental point that there has been no supply of service and therefore there is no consideration. So all that will fall back on the main ingredients of supply itself.
It was a transaction on which they were practical.
Absolutely.
Would there be a centralized registration for service providers who do not have brick and mortar offices but rendering services in different states?
You can think of it, but at present, no. At present, because you have to get registered in the particular place where you are supplying the goods and services. So at present, you don't have a provision like that, but maybe yes, the government can think. Like, for example, banking services, etc. They have given a facility to have as a centralized place for providing all the documents and all. So that's possible, but I'm not too sure whether they will do it across for all services. It's a welcome one, but not sure about how the states will react to it.
Sure. Those are the questions that I at least see on the chat. So yes, sir, we've had the privilege, honor of hearing out two legends on the legal aspects today, simultaneously one after the other. I would say it was very nice to hear it from both of you, sir. So thank you so much. Thank you so much, sir. As always, you have been the go-to person for me for all the chamber matters. Thank you so much.
Thank you. God bless you.
Yeah, Shekhar sir, are you there? Rupa?
There, I heard Shivdas completely. Thank you, Shivdas. Thank you, wonderful. Thank you for your wonderful. You are always a friend of BCIC. Thank you for being here, and thanks so much, Shivdas. Thank you so much.
Thanks, Shekhar. Thank you so much.
Rupa, shall we go to the next one now?
Yes, sir.
Okay. So we have Mr. Shiv Kumar from the Tata Consumer Products Limited. I'm not sure if Shiv will recognize, but I met him quite a few years back on certain central excise matters. Hi, Shiv.
Hi. Can you hear me?
Oh, yes, very clearly, loud and clear. So we
Thanks.
have Mr. I think we've had our share of the legal issues today. So all of us are very eagerly looking forward to hear you out, Shiv, on the benefits from a business side, the GST from a business side of it, to see where we are on the blueprint that we laid out for ourselves way back in 2017, and what could possibly be the next set of asks to the government as far as the businesses are concerned. Shiv Kumar, let me give you a very brief introduction. Shiv Kumar is the Senior Vice President, India Business Finance of Tata Consumer Products Limited. He was instrumental in implementing GST for Tata Consumer Products. With rich knowledge and process across the length and breadth of the company, he was successful in the GST implementation for one of the largest conglomerates in India. He heads the business finance for India business, which includes partnering with sales, marketing, production, procurement, and supply chain. On this aspect, certainly understand the challenges, Shiv, because GST is not just a tax, but it is a business function as well on a lot of aspects. So Shiv Kumar is driving projects on digital transformation, network optimization, and operational efficiency within the Tata Consumer Products. Very challenging role and very interesting role, I would say. There's so much to look forward to in that role. With that, let me hand it over to Shiv. Over to you, Shiv.
Thanks. That was very flattering for me. Thanks for that great introduction. Before I get into the specifics of GST, I'm not a tax expert. I have Arun from my team who helps me with that. Primarily, my role is to basically look at it from a business lens and see what we need to do in the business from a compliance perspective. I go back to while it's about 4.5 years since GST came into play. But really for us, the work started on GST from 2 years before, it really came in, because as you are aware, we went through a lot of changes in terms of the implementation date itself. And a lot of things were falling in place as the implementation dates were becoming clearer. So between me and Arun, we know the kind of challenges that businesses had and how businesses were looking to continuously adapt in terms of readiness to be able to be compliant. And a lot of us, and definitely at the Tata Group, for us, compliance is at the topmost in terms of priority and agenda. So obviously we did a lot of work around scenarios. What could be the potential rates? What does it mean for our operating functions? Various workshops with operating functions to bring them up to speed. Did, of course, manage some of the ambiguity because the operating functions were looking for clarity, which was not there. So there was a lot of trial and error, but finally, we are there. And I think, yes, the first 1.5 years was of course challenging for us, as it was for everybody in the industry. But I think over the last 2.5 years, I would say that we are pretty much steady state, and a lot of stuff that we have been able to do in the business over the last 2.5 years has remained steady state, because we haven't seen too much of a change. Yes, initially we did see challenges in terms of ambiguity on legislation, understanding the rules very clearly. There were changes happening in terms of compliance, but I think all of that is behind us. Now we can only look forward to improvements from where we are today. But before I get into GST, let me talk about the challenges that we had in the erstwhile regime. Of course, tax was ideally tax should not be a consideration for business to set up supply chain, to set up vendors, to look at how we want to invoice to customers. But unfortunately, that was the earlier regime. A lot of the considerations were dependent on what was tax efficient for us, because every state had its own tax laws, the rates were different, and for a multinational like us and for a pan-India presence company like us, we were not obviously doing everything in one state. And as long as you were not doing everything in one state, it meant that you had a cascading impact of taxes. So that was the biggest challenge we had in the earlier regime. And and beyond the tax rates, the compliance itself was complex. We had to run compliances differently for different states. Some states had waybills, some states didn't have. So a lot of inconsistency in the way the tax regime was across states. While for us as a pan-India presence company, it was a challenge. However, I think that's where I think GST came in. It was a breath of fresh air, quite frankly, for us and for I think most parts of the industry, because it made various parts of the country into one, and one India, right? And for one tax rate, one compliance tool, centrally everything managed, and I think that's what GST brings to us as an industry. Today, when we look at things that we want to do in the business, tax is last on the agenda. We really don't look at tax because we know that whether we do it X, whether we do in X location or Y location, there is no impact as far as tax is concerned. The other part is predictability. We know that GST is here to stay, whereas earlier in the regime we were not sure what the changes could happen. But now with GST now there for about 4.5 years, and we know GST is going to be the way of the future. So we know that there is a predictability in terms of tax, and as a result, decisions that we are taking in the business can be taken with a long-term lens in mind. And of course, earlier we had separate rates for goods, separate for services. All of that is now behind us. So whether it is we are in the goods, whether we are in the manufacturing business, whether we are in the service business, the rates are fungible. Whether we have, when we take services, we are able to use it to offset output tax. So I think that's the great thing about GST. And a lot of the cascading effect that we had on taxes in terms of VAT, SENVAT, service tax are all behind us. So it's one tax now, completely fungible between the various elements and also between various parts of the country. So I think that's the positive, clearly a big positive for us from the earlier tax regime. The second element, compliance. Now again, the compliance has been completely digitized. Yes, we did go through some initial hiccups on compliance, changes that were happening in the system, tool readiness, but I think that's again behind us. A lot of companies now have been successfully able to navigate these challenges. And I think they are looking at a compliance ecosystem which is completely digitized. The second element, it gives us visibility. Earlier, when we had suppliers, when we had customers, we were not clear on the compliance of these channel partners. Today, I think this law places equal responsibility not only on the government but also on the organization to ensure that its ecosystem is compliant. Here again, probably I can vouch for the quantum of work that we have done to ensure that we are compliant. We know that our vendors are compliant. There are no leakages that are happening. The tools that the government has implemented has helped give real-time visibility, be able to take actions against vendors who are non-compliant. It has also helped us to clearly bifurcate vendors who are compliant and who are non-compliant. And we as an organization definitely would like to work only with people who are compliant with law. And I think GST gives us the liberty to understand compliance and then accordingly decide how we take it forward with our vendors. Third element, technology. I think a big change in the GST environment is the reliance on technology. Whether it is the returns process, whether it is the e-way bill process, whether it is the compliance process, whether it is a filing, visibility of what's happening for us as well as our channel partners, everything is aided by technology. And all of us know how important digitization and technology is for the business. I think tax and the government has also looked at the same lens and completely transformed the tax regime into a regime which is aided by technology rather than the manual processes which we had, the manual interfaces that we used to have. I think today we are in a situation where we are able to, I think probably our assessments can seamlessly happen online without us having to really go to the tax office, sit across their table, show the documents, right? And I think in the COVID situation, in the COVID environment, I think this is a blessing in disguise. Probably the only positive to take away as far as the COVID environment is concerned. Earlier, if you look at tax regime, you would always look at taxes with an expenditure lens because most often taxes were not fungible. As a result, tax would be looked at as an expenditure. However, the shift of tax now has moved from expenditure to management of working capital and cash. So today, when we look at it from a GST lens, we are looking to see how we can optimize our supply chain, how we can optimize our inventory to ensure that our GST blockage is limited. I think these are some of the big changes that has happened in the GST regime versus earlier. One is making India as one economy, ensuring that the tax regime is the same for everybody. It is same whether I have a pan-India presence or a single state presence or a single state presence. The ecosystem completely has been, we are able to see what's happening in the ecosystem from a compliance perspective. We are able to use technology for running the GST interfaces, whether it is with us, whether it is for us, whether it is for our vendors, whether it is with the government. Now, I think these are some of the great positives from a GST perspective. Yes, there were certain transition issues which still remain. I think anti-profiteering was one. Clearly, again, for organizations that had tax changes happening post GST, there was ambiguity around anti-profiteering. I think today, given that anti-profiteering has been extended, I think that ambiguity still remains. The method of calculation, how do organizations understand whether there is anti-profiteering or not? What is the calculation that they do? What is the calculation that the government is going to do to understand anti-profiteering? How are they going to consider the output tax and also look at the input taxes that companies are saving versus past regime to understand anti-profiteering? These are some of the pieces which still remain as issues for us from a GST perspective. So maybe that's the only negative that I can think of. There's one more, right? That is the inverted duty structure. I think for companies which are at the lower end of the tax bracket and branded organizations, right, whose output tax possibly could be in the 5 or 12, but they're obviously branded organizations, and as a result, they have a lot of service that they take, whether it is marketing, whether it is supply chain. There's a scenario where you have inverted duty structure. Again, how do we look at inverted duty structure? And when the other anomaly when inverted duty structure is, if you have inverted duty structure on account of services, that's not allowable. That is the only dichotomy. While you talk about GST and you talk about services and input services being available for offsetting output, when it comes to inverted duty structure, you're not considering services for the purpose of inverted duty structure calculation. That's a dichotomy. Quite frankly, that goes against the principles of allowing all taxes to be fungible, and as a result, all taxes to be considered for the purpose of inverted duty structure calculations. So these, I think, the two areas which remain challenges for a large parts of the industry. The third element, elements which are still remaining outside the GST ambit. Yes, for companies, and which is fuel and electricity. For companies, obviously the impact is different depending on what your value chain is, how much is fuel as a component of your cost structure. But clearly, the fact that there is still some taxes which are not allowable in terms of input is the challenge. So to me, if I had to really call out issues and challenges, anti-profiteering continues to be a challenge in an area of ambiguity. Yes, it is there for some period of time, but till it is there, the issues on transition still remain. Second element, inverted duty structure and the challenge of services, inverted duty structure arising because of services not being allowed to be claimed. Third element is, some parts of the value chain still remaining outside the GST ambit, primarily fuel and electricity. I think these probably are the areas which we would like to take forward as industry. But otherwise, there are a lot of positives to take away. I think you really have to balance, put the positives and the negatives. There are a far larger set of positives for the negatives. The good part is, I think the government and the bureaucrats are open to feedback. The number of sessions that we are having with government in terms of feedback and the actions that we are seeing from the government are very, very encouraging. I think we will have to keep up the tempo in terms of talking to the government on some of these areas. But to us, I think these are the 3 or 4 areas which continue to be pain points. Otherwise, I think all the pain points that initially existed are now behind us. And I think we are in a regime which is pretty much stable, is what I would conclude from a GST perspective. A lot of positives. Some challenges are always there. Wherever there is a change, there is always things that you need to keep working on. That's true for business. That's equally true for tax, I guess. So that is something that we will continue to work on. We are working with the bodies, with the industrial bodies, to go back to the government with feedback. But in a nutshell, if I have to really look at it, it's been really a great regime for us from the earlier tax regime. So that is, broadly what I had in terms of feedback from the industry. And I'm going to just be open for any questions, any feedback that's coming from the group. But really, that's what I wanted to share, Badri, for all of us.
Sure, sir. Sure. Many thanks. It was wonderful to hear you out. Specifically because there is so much of negative energy around the GST that we see everywhere. It was really wonderful to hear you saying it is a positive change. GST has brought in a positive change as far as the business is concerned. Very happy to hear those positive aspects which GST has certainly brought into business. I fully agree with you that I would put it this way: the cascading impact of taxes have reduced. There have been efficiencies of the pricing, though may not be to the liking of everybody, the whole of the population across India. But yes, quite a few industries, there have been the efficiencies in the pricing because of the GST. I'm sure the Tata products also would have kind of experienced that. That's at least what Arun and I keep chatting quite a few times. Arun, do you want to maybe share your thoughts on this? Arun, are you there?
Yeah, he's there. He's just, we are together only. He's just, I think, trying to find a spot where he can. Yeah, yeah, Arun, you want to come here? You can come here also.
Sorry, I just want to make sure that there's no echo.
Yeah. If we stay together, there'll be echo. Yeah, absolutely, Arun. Yeah, carry on. No echo. Yes.
Right. I think Shiv broadly covered the points of impact. There are a couple of things that we sort of saw as an impact as we worked through the use of technology in the compliance, which Shiv mentioned, be it at a company level or at the ecosystem level. We've been successful in sort of converting or getting a lot of our business partners adopt to technology and may be more compliant. We have more visibility of their compliance. So that's a big welcome change, where we could work closely with the business partners and not leave them in isolation to make sure they are compliant and our business continuity is not impacted. The other area which worked really well is the seamlessness of tax credit, which while there is an anomaly in terms of inverted duty structure, services, as far as services is concerned, where the refund for services is not available, but the negative list for input credits is low at this point, and we would like to see that it is low and doesn't increase, though some of our assessment experiences could be a little different. But that's one thing which is heartening and a welcome change compared to the earlier regime.
Sure. That was wonderful, Arun.
Badri, I can tell you that as we did the transition, the amount of conversations that we did with the business teams, right? Because it was a business change, it was not a finance, it was not related to finance, it was a business process change. The amount of conversation that we did with the business teams leading to the go live date, the work that we did with the vendors to ensure that they were compliant, not only compliant, but they ensured that, but what we needed for them to be compliant, for us to be compliant end of the day, and for us to get the efficiencies in the GST structure. So a lot of conversations with our vendors, not only with our vendors, but also with our customers. A lot of and we know the India distribution system, right? Which is the general trade, where you need to really carry along your distributors who are small size entrepreneurs who do not understand some of these complexities. They will later, but I think initially to start with. So a lot of work we did with our distributors to bring them up to speed, educate them on what they need to do at their end, so that if they are compliant, if they continue with business, then I have no challenges in my business. So it was important for us to ensure that the entire ecosystem was ready from a GST perspective. It was not important just from a compliance perspective, but to ensure continuity of business. So I think these are some of the learnings that we had. It was a very challenging phase. Me and Arun know the kind of conversations that we've had over the last 2 years leading to GST as things changed, as things became clearer but closer to the go live date. So I think these are some of the experiences that I wanted to share with the team on the team on the call.
Wonderful. Thanks, Shiv. Certainly, the takeaway I would say is, the experience that you and Arun shared is basically the uniformity in compliances across states is something which we have to acknowledge, which was not the case in the pre-GST regime, as you mentioned. And seamlessness of the ITC, yes, of course, there'll be challenges, there'll be disallowances, it will not be free-flowing as we want it to be. But yes, it is definitely, we are in a better situation and a position than how the credit mechanism was under the erstwhile laws. And definitely, I would only repeat what you said, just so that none of us forget that, Shiv. Two things. One is technology. Integrating the GST requirements into the ERP is certainly a very important thing. In fact, as one of the topics that I'm going to be speaking about tomorrow is also this as part of my discussion. And yes, what Shiv mentioned, please all of us to remember, GST is not just tax. It is a law. It is something which impacts the operation, something which impacts the businesses at large, the functions across the spectrum in an organization, and not just the finance and tax divisions. That was wonderful. I'll just see if there are any questions. I don't see any questions here. That was wonderful, Shiv. Thank you so much. Thanks so much for readily agreeing to actually spare your time and share your thoughts with all our members. And yes, the speaker profile, the topics speak for itself because of the number of people that we have, though it's a Friday evening. So let me just wind this up now, requesting each of you to log in tomorrow as well. We have a very interesting panel discussion coming up tomorrow. Thank you, and thanks, Shiv. Thanks once again. A very big thank you from BCIC.
Thanks a lot, Badri. The pleasure was mine. Thank you for giving me the opportunity to air our views. Right. Thanks a lot. Take care, everyone. Bye.
Thank you very much, sir.
Thank you, Badriji. Thank you.
Sir, we would like to request you to kindly stay with us for 2 minutes. We would like to play a small thank you video as a token of our appreciation, sir.
Sure. Thanks, Rupa.
Thank you very much, sir. Thank you very much, sir. We look forward to your participation, sir, in case your time permits for tomorrow's session as well. And I request all the participants to kindly join us for an exclusive session tomorrow, sir. Thank you very much, all of you, once again.
Look forward to your discussion tomorrow.